All right, guys, it is update time. If you're new to Founderpath, welcome. If you don't know what we do, we're helping bootstrapped SaaS founders get capital by turning their monthly recurring revenue into upfront cash. And it has been an exciting August. We're going to jump here into some of the updates. Let's jump in first to the slide deck. And I won't bury the lead here. Revenue growth in August looked really, really strong. So we went from about a $2.3 million run rate to a $2.8 million run rate. And remember, we've done this with a team of 4 people. We're trying to really practice what we preach here. I think a lot of you guys see big fundraisers on Twitter. You see really noisy founders out there hiring bunches of people, but revenue per employee is an interesting metric to look at. And we're very proud that we've been able to build this tool for bootstrap founders to get capital with just a team of 4 people while also growing really healthy revenues. For a revenue per employee, what are we at? About $600,000, $700,000 in revenue per employee, which we're really, really proud of. So we're going to keep focused on that sustainable growth, capital efficient growth, but hockey stick growth nonetheless, right? We've grown very, very fast here, helping founders get capital. People are paying us to get that capital. Then they're also paying us for our reporting tools. So how many people are paying us? How many founders are working with the platform today? Well, we've 2x'd revenue tracked on the platform over the past 6 months, and we're growing the number of founders 10% month over month. So what that means is that red line is total revenue on the platform. So that just passed $470 million. We'll break $500 million next month. And by May of next year, so very soon, call it 4, 5, 6 months, we'll break $1 billion in revenue tracked on the platform by founders. And this isn't just sort of one of those numbers, this isn't one of those fake numbers where you put in your revenue in a type form, you say $1 million, and we add that all up. This is real tracked revenue via APIs to your bank accounts, via APIs to your subscription tools, which you guys are connecting to Founderpath so we can give you back free reporting, insights, and capital, which we really appreciate. So this is a key metric for us, is how much revenue are you guys tracking on and using Founderpath's free tools. In terms of the total number of founders that are on the platform, we've grown this 10% month over month as well. So this is we're now at 2,700 of you guys are actively using the platform. And again, when I say actively using, what I'm talking about here is either the free reporting or our capital. You're using capital on Founderpath to preserve your equity. Now, to date, we've just passed 68 founders have taken capital through the platform. That's the blue line that you see there, so good growth. But here's what I care about more, is you guys have taken capital over 131 times. That's the number of draws across the 68 founders. Now, this is really important because when we're building Founderpath, we really are working closely with many of you, actually building schedules for you. So you don't want to take capital that you don't need right now because you have to pay, you pay for that capital. You want to take it right when you need it, which means, and we're seeing this, several of you guys are coming in every 7, 14, 30 days and taking a new tranche of capital. You then take it, you invest it in ads, you hire another developer, you grow your team, and then you rinse, wash, and repeat every month. So we want to see that number of tranches pulled number continue growing really aggressively month over month up to the 200, 400, 500 range here very quickly. And then lastly, how much capital do we have out? We just passed 13.2 million capital out to founders, right? That's up from 11.8 million last month and 8.6 month 2 months ago. So this is also growing, hockey stick growth. We're really proud of this. And you can see the average founder there is taking about $194,000 from Founderpath. That's a lot of dilution that folks are saving themselves from because they get to keep all their equity. Remember, we're not taking any equity at Founderpath. There's no covenants, there's no warrants, there's no legal fees. In fact, if you guys log into the platform and take a look, you'll see we put out all this free reporting like this lifetime value curve I'm looking at right now. This is my favorite chart, by the way, because it tells me over time what my cohorts are paying me. So what this says is in August, on this demo account, 203 customers signed up, the gray bar. The first month they paid $68, and almost all of them renewed. So they doubled. The actual collected lifetime value is $137 in month 1. And so what this allows you to do is go back and say, wow, this cohort that signed up in May, the lifetime value of $481 is way higher than the cohorts on both sides of it. We should go get more customers from where we got them in May. So it allows you to quickly see your highest lifetime value customers over time. And you can turn off these months too. So you're only looking at, month 1, 2, 3, right? So now you can see here, we're just looking at first month lifetime value. And you can see the average ARPU per account is increasing over time from $47 in December to now in September, 79 or 68 in August. You can then layer on each additional month. These are the purple lines that you're seeing pop up on top of each other. And that shows you your LTV growth. So this is an example of some of the free reporting that you guys are getting. But again, you then click Get Capital, and you guys are able to pull down and draw capital very quickly too, using the Founderpath credit score we're giving you on the homepage. Now, this credit score, let me minimize this, see if I can get it on. There we go, get it in one screen here. You can see you track the score over time. The higher your score, the more capital you can take at better rates. And this is all based on MRR, churn, retention, a bunch of those figures that you guys are seeing there across the bottom of the screen. So we're really proud at how fast that's growing. And this is just the beginning, folks. I mean, we've got so much opportunity to keep helping bootstrap SaaS founders. Here's how big we think the market is. Right, so bootstrapped right now in our community currently, there's about 1,200 SaaS founders. Now, there's 1,200 SaaS founders that I've personally interviewed via our podcast, adds up to about $6 billion in total private ARR. When we go and take that a little bit bigger, right, so bootstrapped plus funded in our community, it's about 1,700 founders that I've interviewed, right, and $24 billion in private revenue across those 1,700 SaaS companies. So what's the total market look like? Well, we think that's there's about 32,000 SaaS companies in the world with meaningful revenue, right? So above, $100,000 per year. And that's about $500 billion in total ARR to manage. So this is why we get excited about where we can grow is right now we're only tracking $500 million, right, through our platform. There's 500 billion, right, to track. So we're just getting started in the market. There's a lot of room to grow. And the way we think about growth is not just capital, right? It's not just capital. As several of you guys have seen, we've gone into additional verticals on our product line. So you can see here, we think about product in 3 very specific ways. We think about community, we think about insights, and we think about financial services. There's a lot of great communities out there like Latka, right? SaaStr, SaaStock, SaaS North, Indie Hackers, right? We think about insights, right? There's a lot of great tools out there like ProfitWell, SaaS Optics, Barometrics, and then others that do other things. And then financial services, right? Those are, legacy players like traditional banks, Tamaya, Lighter Capital, which, we're refining a lot of founders off of those right now because we have just much better terms. You've got then other sort of plays here like become, a bank, expense management, etc. So this is sort of how we think about the full product suite. Now we start with community, we expand it into free insights, and then we use those free insights to start actually getting SaaS founders capital directly from Founderpath. Now, what do we do next? Well, we'll partner or build in each of these 3 spaces. We'll think about expense management, we'll think about banking, but most importantly is we'll think more about community as well. That's a big piece of what we're trying to build, and we're thrilled to announce that in August, we got FounderLed launched. Actually, here it is. FounderLed.com. We've got the swag in FounderLed, and the way we're thinking about FounderLed is a invite-only group of SaaS founders, right? So here's a quick peek: a community of SaaS founders who play Catan, read Zero to Sold, and care about growing without tons of VC. Actually, that's sort of funny. You can see Catan and Terraforming Mars, some of my favorite games behind me, but you then also have a lot of our favorite bootstrap books, right? Like Arvid did a great job here writing Zero to Sold. Thick book, but really good for bootstrappers. We've also got Rob Walling's book. I think this is a hit. I think it doesn't get enough love. I think more people should read it. And then we've got others like Wes Bush's Product-Led Growth. So we're always talking about favorite books and who's reading what inside the community. We're playing games together. Again, we accept 10 new founders every week. So you can do this right now. You can apply now. I'll put the link down below if you want to apply. But here's what I love. Inside, because it's such a curated community, people share really remarkable things. Matt is like a product hunt genius. He uploaded a checklist that he uses to get 1,400. He used to get 1,403 upvotes, and he does this now for other founders. So how do you dominate product hunt? Yeah, Javi from Holded, or Hobby, sorry, they didn't even announce what their exit price was, what their revenue was when they exited. He announced it inside the community, and so you get insights to unique valuation data. You'll get Google Doc templates and resources. like the template, the script that they use to get 581 G2 reviews. And then there's just general discussion along with discount codes, playbooks, templates for hiring and scaling, and then individual cohorts for your size. We're always going to be running challenges as well too to just keep engagement high, and then providing cheat sheets. Like maybe you guys don't want to hire internal salespeople. Well, here are the top SDR firms that you can pay to basically do your sales for you. And these are vetted. We personally vet all these guys and do the research for you. We can then link to some of these resources like, how to launch an affiliate program. We sort of show you that. So anyways, we're really excited about launching this and getting it live. You guys can check it out. The link is going to be down in the bio. But that's what I mean when I talk about community being super, super important. And I think you guys may have missed some of that, but here it is again, right? How it works, right? All of this community stuff right in the page. So again, we'll get this live. We'll start accepting cohorts here in September, and we'll keep growing this. So hopefully you guys found that helpful. Just sort of summing up here, diving a little bit deeper into the metrics. This is where growth has come from over the past couple months, right? So this is August in this last column over here. And what you see is this first row, users growing very fast, up to 2,700, total revenue up to 471 million, 13.2 million out. That's how much you guys have taken from the platform, 68 founders total. And then you can see here, we can look at net ARR, gross ARR, and then in terms of run rate, so that's 1.2 million versus 2.7 million. Growing 17% month over month right now. So again, we're really thrilled that we've been able to grow the company in a capital efficient way. Because you have to remember, anyone that's giving capital to bootstrap founders, if their teams are massive, that means someone has to pay for those employees, right? Who do you think is paying for the employees? They have to pass those costs on to customers. So we're very, very, very picky when we bring on new team members. We want the smartest, best people in the world, and we want to only add people when we really, really need them, because those costs, again, get passed on to the founders, which we don't want to do. We want to make the capital as cheap as possible for you guys while providing free insights and community as well. So guys, I'm really excited to get you guys out the next update here in September. We're going to have a great month. If you want to see how much cash you can get, go to founderpath.com and sign up. And I'm really excited to see a lot of you guys flying into Austin, Texas this week, including my team, Charlie and Mubs and Kevin, and 150 SaaS founders coming to South Congress Hotel on Thursday, where we're giving out the Bootstrapper Award. It's going to be a ton of fun. Anyways, I love you guys. Keep bootstrapping, keep your equity. You can grow fast and keep your equity. You don't have to sacrifice one for the other. We're here to support you guys. Again, guys, I'm Nathan Latka, building Founderpath, where bootstrapped SaaS founders come to get capital without giving up equity. Take care. Bye-bye.